Hello everyone, welcome to mid review. So we are going to be doing a mid review of the week, specifically on gold, how the gold has moved so far during the week, and how we are looking to end the week. Yeah. So I'm going to be doing a quick breakdown on XAUUSD, and before that, I would like to look at the XY to see how it is moving, right? Because the XY is correlated with gold, right? So if you look at the XY, we can see that it is moving as we predicted for the week. So I was looking at, we've had a kind of on a bearish movement on the XY, and looking at our trend line, we notice that we have a first touch here on this trend line, we have a second touch on the trend line, and we are expecting a third touch on this trend line. So after an impulsive move, we need the market to correct. So we use our Fibonacci, we place it on the high and on the recent low, and then we're expecting a retracement. And my key level I use is 79 and 71.9, right? So I'm expecting a retracement of the XY here before continuation to the downside. And market open here during the week, and we had this our arrow. You can see we're expecting price to go down, which is what happened, and price is now going back to the upside. So from what we're seeing on the 4-hour time frame, we're expecting the XY to push the upside and then drop. So if we're expecting that, then if we go to gold, what we are seeing on gold right now on the 4-hour time frame, we can see that we form kind of like a triple top on gold. So if you are doing analysis, you see that gold is failing to break above these highs, right? Gold is failing to break above these highs. So we've had kind of like a triple top here on gold, and seeing this, I can tell you for sure that we're expecting price to start going back to the downside again. So there is a possibility we might see gold returning back to lows, right? Yeah, because now we've been trapping this range. This is on the 4-hour time frame, right? So if you go to the daily, you will see that more clearly. On our daily time frame, you're going to see that more clearly, where you see price rejecting here. We have our first rejection, we have our second rejection, right? So this has been a significant point on the gold chart, right? So now what we'll have to do next is that we are currently in a range on gold, so you can't determine if you are in an uptrend here on this daily time frame. So the best thing to do is that you mark out your key level structure points where you can be expecting some move, or either way you call them points where the market has done what the market has reacted several times. As simple as that, right? So looking at this, the first point I want to look at, I'm seeing this low that we have here, then I'm seeing this level also here where price is currently reacting to. Yeah, now doing this, I can see, okay, yes, price has rejected off this our high that we have here. Price has now come back to retest back this low we have here. So there is a possibility that, okay, if should price break below this low, there is a high possibility of price to move all the way here to fill this gap, right? So you can see how on the daily time frame we are seeing a clear move from one point to another, right? So if you're able to view this from the higher time frame, when price start moving on the lower time frame, you're able to tell where the direction of price could possibly be, right? So having seen this, let's now move to the 4-hour time frame and do a top-down analysis. So on our 4-hour time frame, we can just keep on adjusting our zones, right? So I could possibly adjust this zone to be like this, right? We will see that we already have kind of like a breakout on the 4-hour time frame. I could get more zones here where price has reacted off pretty well on the 4 hours. So this is another key zone. We can see that price has reacted off pretty well on the 4 hours, right? So as price is moving, so we could see that we could possibly have price move here, give us a rejection, and then retest, and then continue to this downside if gold should continue falling, right? So for you to continue having more buys on gold, you need to see that price should break more above this side. If price starts declining back to this side, going down to the downside, we might possibly go back here, as I said, on the daily time frame. So let's continue our top-down analysis. Now we've had this impulsive move that has been caused here by what CPI, right? After having this double top formation here, we've seen price what broke out of the range. It's been consolidating for days, right? Broke out of this range. We have over 40 hours on this particular zone. So we've had a breakout of this range. Now price is now what going back to the downside. So we are seeing kind of some bearish sentiment setting into the market, and this move was caused mostly by what CPI, which was released on Wednesday. That was yesterday, right? So I didn't trade the CPI, but I had a sell move. When price got here, I caught a sell on my Telegram channel, which I'm going to keep a description here, and I had my stop loss above the highs, and we were able to catch over 120 pips with the CPI move. So we didn't trade the CPI, we had our analysis before the CPI, and CPI had to just follow with our analysis. So if you want to see how you want to see my performance, you can go to the Telegram channel. I share all my trades for free, and we've been killing it back to back. I'm going to keep a screenshot here for you to see how it is doing. You can go there. I share exclusive content and I drop updates like this, right? So let's continue to our breakdown. So now what is next? We've had this impulsive move to the downside, which you can see clearly. I'm going to zoom in, right? Which you can see clearly. We've seen that what looking at candlesticks, you can see all this move to the downside, which was caused by CPI. As I said, the market has to move a bit. What I'm expecting now is a little bit of a retracement to this zone that got broken, and then what continues to the downside. So I want to see price what we test back this zone, then what continue dropping to the downside. Right now, if you can see, you see that price is already rejecting at this our zone here, at this zone that we've marked here. Remember, this was a zone on the daily time frame we saw, right? Price is already reacting on this particular zone here, right? So now we are still going to keep observing. So now what is going to help you here now is your Fibonacci. So what you can do is you take your Fibonacci. So let me pick the Fibonacci tool first. Let me pick my Fibonacci tool. And how do you place your Fibonacci? If you're looking at price continuing to the downside, you place it from the initial high that you have and then to the initial low, right? So Fibonacci helps you to measure what the retracement, how the level of retracement the market is going to have before moving to its original direction, right? So now we can see that the market has moved impulsive to the downside. I want to measure the correction, right? Now in measuring this correction, you can see that now price is reacting. Let me zoom this in. Price is currently reacting what at the key Fibonacci zone, which is 33.6, right? You can see the price is reaction at what 33.8 Fibonacci zone. Now this is a key level in confluence with what with a resistance level. Now we are looking at this our main zone where we are looking at, right? We are looking at this particular zone, and you can see that price is there's a Fibonacci of 0.5% here, right? And we also have a 0.6% at this our zone. So there is a high probability that we are expecting price to actually react at this particular zone where we're looking to get more sales, right? Good. So now having had that in mind, so this is going to be my key zone. This is going to be what my key zone where I'll be looking for price to react on. So if I move for that to the 1 hour time frame, now moving to the 1 hour time frame, you can see it clearly, right? You can even see that we have some fair value gaps here. We have some fair value gaps at the top here. So this tool helps me to get those fair value gaps, right? So if you want to know more about this, to just comment. I'm going to drop it in the comment section, right? So you can see that we have this fair value gap price my field. So this is a combination of price action and smart money concept, right? So this is another fair value gap we're expecting, which is in confluence again with our Fibonacci. So we are going to be looking at price is going to react on this particular zone. So we're already having a first reaction. Here, and we're going to look in another reaction to see here. This is where I'll be interested for the sales, or price might possibly come do something like this, move to this upside, grab liquidity, and then react on this zone before we get a drop to the downside, right? So and I'll be targeting first target, and then to swing. If price breaks this zone, then we'll be expecting price to move all the way to this zone possibly, right? But this is our initial target. This is our initial target here, right? So pay attention to these zones I've marked on your chart. So we are looking at what 2771, 2768 zones, right? 2750 and 2760. We are looking at these zones to see how price is going to react based off these zones for us to get our trade, right? So I'm going to drop updates how price is going to react on these zones on the Telegram channel. So if you're interested, you can join the Telegram. I'm going to leave a link in the description or on my bio where you can get it, and then join the Telegram channel for more updates on this particular move. Yeah, thank you. See you.